let's get into some predictions here for 24. Next week we'll have the total year 2023 numbers for you for your market from November to November, year over year. We don't have all December stats here with just we'll have that by next week's show, but year over year for November, median sale price went up on a rolling 12 months for all property types in Connecticut, 7.1%. For single family homes, that went up 6.2%. 6% is a pretty healthy number for year over year. But I'll ask you guys, over under on 6% annual growth for 2024 and let's just do single family homes. For single family homes in 2024, you guys got the over or under on that. This is not real estate advice. This is just having us a little fun here.
Guess. Yes.
On the last,
I'm gonna go under. I think we'll stay positive for sure. I'm gonna guess like 2 or 3 is my guess.
Over all day.
All right, so Lee's got over.
Demand is going to be strong.
Yeah, well,
it'll be interesting to see what happens with supply.
You're saying rates are coming down. I think they're going to keep going down. At the end of the day, it's like I'm looking at the inventory where I'm just listing a few houses right now, and there's nothing. When I mean nothing, there's 2 or 3.
Yep.
So
and
if rates keep coming down and inventory actually starts picking up, I think it could get a little crazy out there again.
And Lee's making a great point with the inventory he's looking at in the price points that the majority of the sales happen. It's going to be highly competitive. It's really hard to get, the median price this year for single family homes was $393,000, rolling 12 months here, ending the year. That's unaffordable for a lot of people, so to get a $350,000 home, you're talking about those price categories are going to be highly competitive. When we factor in the entire market, 6%, when I factor in luxury, which I think is going to have a pullback on pricing, I think overall we're talking flat or a little bit up. I guess I'll take the under. We are at such a low inventory level. I think as the rates come down, the inventory will start to loosen up. And most sellers are buyers. They don't sell to live in a tent. That might just be a San Francisco thing. It's certainly not a Connecticut thing. Most sellers are going to sell to go buy another house. And I think that fluidity is going to, at one point, create a little bit of price confusion where it's like, oh, wow, there's more activity than we've seen, where you could see a flattening on prices at that point. So I'll just go a little bit under. How about this one? Pending sales. Lowest level I've seen since the GFC for sure. Lowest, due to the numbers here, lowest level we've seen since 2012. Pending sales was about 20. Let me give you the exact number here. Pending sales for the year, 26,000. This is November over November, so minus 21.5% from year over year the year before. Are we positive or negative again in 2024 as a percentage number going up or down for pending transactions?
I would say transactions, I would be shocked if they're not higher. I mean, there was a lot of people that wanted to buy in 2023 that didn't buy, and there's a lot of people that wanted to sell that didn't sell because of the rates. And I think if rates stay below 7, which I think they probably will, we'll see more homes, more people making the jump because they're ready to move. I'm going to say more transactions.
Yeah, I'd say it all depends exactly how you were saying before. It'd be exactly what price range you're looking in. I'd say if you're looking in luxury, I think it would be less. If you're looking in an affordable price point, anywhere from probably like 600 and under, I'd say more.
Yeah, I'm going to go with more because it just got so low. Again, lowest we've seen since 2012. And if we go back, those are not anytime nationally, which we've seen you dip below 4 million seasonally adjusted transactions, which is kind of like the Mendoza line nationally. You typically never see that going back 25 years. And anytime you've seen us get down to a real low level, it's not there for long. We did have the double dip, obviously, of 09 and then back down 11 and 12.
Yeah, the economy was pretty bad back then too. I mean, that's probably why it was so low. I mean, the economy is much better now than it was in 2011, 2010.
Economy is much better, and mortgages, that industry has completely changed. We'll have all of the final numbers next week on next week's show to go through. But any other final thoughts or projections here, Brian, on as we go into 24?
Well, I think mortgage applications will increase. I looked at the last week of December 2022, the index was at 184. Last week of December 2023 was at 191. So 4% increase over last year. I think that trend will continue. Just more activity. And like you said, it's been record lows, so can't get much lower.
One projection I'd have is I think the spring is going to be much better than this past spring based off of what we're seeing right now on early indicators. I do think the second half could be as slow as this year's second half, which might be shocking, but we're going into an election year. I think those 60 days leading up to the election are going to be tricky. It's going to be a highly competitive election, could get ugly. And I think you'll see some wait and see approaches like I've seen in other election years from a real estate transaction perspective.